Good morning, friends. Welcome to Adda 24/7. Today's lecture you'll really find it interesting. Why? Because the topic is interesting. Basel 2 and 3. Everyone, you just hear the name Basel 2 and 3 and every CAIIB student gets afraid. But there's nothing to be afraid of. You'll see this in the session. Okay? So what is the schedule for today's session? Basel 2 and 3 mandates means requirements. Then second CRAR components. Now what are the CRAR components? Means what is tier 1? What is tier 2, what is 81, what is CET1, all those things. Okay, so, and last part is the objective questions. Okay, so let's move on. Action packed session of half an hour. Let's move on fast. Before going, Adda 24/7, download this app. Also join Officers Adda 24/7 YouTube channel. On remember, press the bell icon. Here on Adda 24/7 you'll get all the updates. Secondly, you'll get all the video lectures, all the tests, all the notes. You have everything in one go. Why do you go here and there? Okay, just download it and it is easy for you for studies of all banking exams. Okay, let's move on. Okay, one more. We are starting this batch of CAIIB. This is on June 6th. Okay, June 6th selection batch, fast batch, crash course I will call it. Right, crash course means what? 13 days ABM, 13 days BFM over. Okay, so you'll get whole portion of CAIIB, ABM and all the numericals, case studies, all the important parts. See here, whatever you require for clearing the CAIIB, it is covered in this course. So join fast as possible. And the fees, use this code Y432. I'll come to it at the end. Okay. So let's start with the topic Basel 2 and 3. Okay. What are the minimum requirements of Basel 2? Remember this. CRAR. What is CRAR first? Understand this. CRAR means what? Say this. CRAR is, I'll write this. CRAR. Okay. So capital to risk weighted asset ratio. Okay. So it is equals to capital upon RWA. Remember this formula by heart. Capital upon RWA. But what is capital? Capital consists of three parts. Okay. I'll explain it over here. Capital is of three parts. Capital, I'll write it over here, equals to T1 plus T2 plus T3, but this T3 we don't consider it in calculations. It's an emergency capital. Emergency. Okay, it's an emergency capital. Means what? Due to market risk. If I feel some urgent situation and then I require the capital, only then due to market market risk. Okay, this happens due to market risk, only then T3 is allowed. It is not allowed for this credit and ops risk. Remember this. This is an exam question. Okay, T3 is always allowed only for market risk. Now this is not a topic of discussion today. Our topic of discussion is T1 and T2 over here. Okay, T1 is what? T1 is a free capital. What is free capital? Free capital means shares, equity, right? Equity, then what? R&S, reserves and surplus, right? Reserves. Okay, these are the two examples I have given. There are many over here. Okay, and T2 means what? Paid up capital. See here, paid capital, not paid up. This is free capital and this is second one is paid capital. Means I have to pay some interest on this capital. Means what? If I take some loan from some bank and then use it as a capital, then it's a paid capital, right? So paid capital. Here again there are various instruments. Okay, those instruments are like, means there are many actually. Revaluation reserves. So I won't write it over here because it will take a huge space. Revaluation. I'll just give you one example. Revaluation reserves. Okay. Also there are these contingency reserves. Okay. All these are there. I have taken a separate lecture on this. You can definitely follow that. Okay. So T1 and T2. Okay. Next is RWA. This denominator part RWA consists of three parts. Okay, RWA means what? Say this. RWA. It consists of three parts. Credit RWA, risk weighted asset. Credit plus second is what? Market risk. These are all related to the risk. Plus third one is ops, right? Ops risk. So RWAs are of three types: credit, market and ops. Okay. How to calculate RWA? RWAs are always calculated here. Again I have taken the case study on this. Follow that case study. Just last week only I have done it. Follow all the videos under this series. Okay. So how to calculate that RWA, I have taken it over there. Okay. This is not a point of discussion today. So point of discussion over here is As per Basel norms, the CRAR minimum requirement is 8%. As per RBI guidelines, it is 9%. So now tell me who is better. Is RBI better or Basel better? Who is better? CRAR is the safety requirement, I'll call it. The more CRAR, more safe is the bank. So who is better? Type fast. Basel is better or RBI? Basel or RBI? Type fast. Everyone, type fast. Yeah. Who is better? It is correct. RBI. Now you guys are typing, right? So it is RBI who is better. RBI, then banks undertaking insurance business means what? If your bank is doing an insurance business, then the minimum CRAR requirement is 10%. Okay? Now tell me one thing, common sense in India. Is there any bank which is not doing insurance business today? Is there any bank? There is no bank. All the banks, because third party income is a must nowadays. You can't have your income just on the bread and butter means loans. Okay? So third party, agency commission is to be earned by the banks at any cost. So this is definitely 10% for almost all the banks now. New private sector banks 10%. Now what is this new and old here? New private sector banks means all these HDFC Bank, ICICI Bank, IndusInd Bank, Axis Bank, all these are new private. Old means then what? Then Karur Vaishya Bank, Karnataka Bank, all these are old age private sector banks. In fact, these are just a name. There are many as such. Okay, you just type on Google old age private sector banks, you will get everything. Okay, so new age private sector banks, it is 10%. Local area banks and small finance banks 15%. Now what is this? Local area bank is this question won't come to you because local area is limited to local area. Okay, it's not a big bank. But small finance bank, this question will come to you, because what is a small finance bank? All these banks which we are seeing nowadays, right? Ujjivan Small Finance Bank, Utkarsha Small Finance Bank, right? Jana Small Finance Bank, all these small finance, Equita Small Finance Bank, right? All these small finance banks are having a CRAR of 15% minimum. Okay, so remember these figures. For dividend declaration by the banks during previous 2 years and current year, 9% CRAR. Means what? If my bank wants to declare the dividend, then minimum CRAR should be 9% for last 3 years. See this, previous 2 and this year also. So 3 years my CRAR should be 9%. Otherwise what will I do? Banks are very cunning. What do? They don't have a CRAR, they don't have a capital, that much capital, and then they declare dividend also to the investors. So that is bad, isn't it? If I am not having anything to eat, how can I donate? It's as simple, isn't it? I must have something to eat first. My stomach should be full. Only then I can donate. Means my CRAR should be full. Only then I'll give dividends to the customers. Otherwise, what's the use, right? So that's why RBI has kept it. Keep it 9% minimum last 3 years. Okay, move on. Now what are the Basel II mandates here? Basel II, as I told you earlier, CRAR, minimum CRAR is 8% for Basel II, right? What is RBI? 9%, just now we saw it. Now what is this tier 1 CRAR? 6% for Basel. But as per RBI it is, if I go for RBI, it is 7%, 1% extra. RBI is everything is 1%, okay? Basel says 8%, RBI says 9%. Basel says 6%, RBI says 7%. Okay. Only tier 2 it is not a it doesn't make any difference, huh? Because otherwise you'll say RBI tier 2 it says 2%, then RBI will say 3%. No. Tier 2 is same. Okay. RBI has stated that Indian banks must have a CRAR of minimum 9%. That's okay. So every bank must have a minimum CRAR of 9%. But the government of India has stated that the public sector banks must have a capital cushion with a CRAR of at least 12%. So what does the government say? 12%. Now here understand there's a difference between RBI and government. Okay, RBI is for all the banks and government shall govern only on the public sector banks. All these SBI, PNB, all these public sector banks, right? So they'll definitely govern on that. And what they have mandated? See, you have to keep this CRAR of 12%. Let RBI say it for 9%. We should maintain it for 12%, right? So this is huge. And this is good also for all the public sector banks. If you maintain a CRA of 9%, then what? You are the safest ones, right? Next. Now we come to this slide. See this. What is this? This is all the classification given. What was the second part in the schedule? What did I say? First one was mandate and second one was all that requirements, right? Tier 1, tier 2 requirements. See this. Understand this concept very clearly. There is capital upon RW, T1 plus T2. T1 consists of, now look at this, T1 consists of, I'll write this over here. T1 consists of, see this, T1 equals to CET1, I'll write it over here, CET1 plus AT1, AT1, okay. T1 consists of CET1 plus AT1. Now what is the CET1? CET1 means common equity, okay. Common equity means what? Common equity, now it will consist of what? This, it will consist of firstly common equity shares, okay, shares, not no preference shares, remember this, not preference shares, common equity shares, plus it will consist of reserves and surplus, R&S, okay, reserves and surplus, plus net profit. Net profit will also be a part of this because net profit is ultimately added to R&S, okay. So this is a part of CET1, okay. What is this AT1? AT1 is what? See this. What is this? In shares, R&S, net profit. Do you have to pay anyone? That's why T1 is called as a free capital. And this requirement is 5.5. See this. 5.5%. This part. See this. This is over here. 5.5. Okay. Understand this very properly. Are you getting this up till now? Type yes if you have understood. Type yes fast, 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 fast. Type yes if you have understood. This is 1. And this is 2. This, which one? Yeah, this one is 2. Okay. So 1 and 2. Type yes if you have understood. 5.5 is this. And this 81. 81 is 2%. This is 1.5%. See, this 2 is 1.5%. Okay. So now what should be there in 81? 81 will see here. C81 I had all these. So 81 will be what? 81 will be PNCP. PNCP. Now what is this PNCP? Perpetual non-cumulative preference shares. Perpetual non-cumulative preference shares. Now what are these? Non-cumulative means what? Here if I miss out a dividend at any part, I don't have to pay the dividend again next year with arrears. Okay. If it's not a NC, means non-cumulative, it's a cumulative. Then if I miss out a dividend on any preference share, next year I'll have to give the dividend again with arrears. And perpetual. Perpetual means long term. 50 years, 70 years, all this. More than 10 years you can call it. More than 20 years you can call it. Okay, that is perpetual. So 81 will consist of this PNCP plus there is one more. Okay, they call it IPDI, Innovative Perpetual Debt Instrument. But logic remains the same. See here, logic is very simple. It should be a long term, no compulsory payment. Okay, so now that requirement is 1.5. Okay, got this point now. Now total this 5.5 and 1.5 is what? 7. So that's why T1 as per RBI comes out to be 7. Okay. So if I add this 1 and 2, see this 1.5 and 5.5, I'll get this as 7. So T1 is what is the minimum requirement? 7. What is T2 now? See this T2 is over here. Where is this T2? Come here. Yeah, this is third. T2. See this T2. Okay. This T2 is 2%. What will be there in T2? What is T2? T2 is a paid capital, means I'll have to pay interest if I want that capital. Okay, I'll take a loan from you and pay interest, so that is a paid capital. So that part T2 is always compulsory payment. Okay, so that's not a good sign. Okay, T1 is always a good sign, isn't it? So now coming back, T2 capital 2%. Got this point? Minimum 2. So what did I add in T1? T1 was, I'll write it over here. Okay. T1 I had 7, so I'll write this just 7 plus T2 I have 2, right? So 7 plus 2 is 9. That's why total CRAR becomes 9%, right? Got this point? This is T1 and this is T2. I'll write this because you should understand this. This is T1, okay? T1 and this is T2, okay? T1, make this dark, okay? T1 and T2. So now we got it. How we come to 9%? Now look at this further. Once I get this 9%, so I've got this figure. What will I do? I'll add this CCB. Now Basel III comes in. See here, up to Basel II it's 9%. Now Basel III comes in. Basel III says capital conservation buffer 2.5%. So what do? I'll add this 9 plus 2.5%. This is under Basel III. Okay. So that is the important point over here. Got this point? So now my requirement comes out to 11.5%. 11.5%. Got this point? So that's why this is my 11.5%. Understood everyone? Move on. Okay. So what is under T1, T2 and T3? See this. Paid up capital, common stock, disclosed reserves, goodwill, negative. Okay. All this goodwill and everything is T1. T2 is what? Undisclosed reserves, asset revaluation reserves, general provisions, general loss reserves, hybrid debt instruments. Okay. Subordinate debt. T3, short term. Okay. Got this point? So now let's move on to objective questions. Before going here, this crash course, you must join this on June 6th. Just how many days are remaining? 4, 5, okay? And all these 35 plus hours of ABM, BFM, mocks and ebooks, last minute preparations, recorded videos available. Okay? So join SAP. Unlimited doubts can be solved. Join SAP as fast as possible, because here I am getting only half an hour. There we have lectures of 2 hours. Okay? You will be benefiting a lot. How to use this? Use this code Y432. What will happen by that? I will show you at the end. Okay? How to use this. Okay. Now let's come to these objectives. With reference to Basel III, how much capital conservation buffer are banks required to maintain? Now this is easier for you. CCB, what is it? Just now we saw it. What was it? This, right? What was it? Type fast, everyone. So what is the answer? A, B, C or D? Fast. Yes, correct. 2.5, correct? Next. Which one is not under the 3 pillars of Basel III norms? Now, which one are the pillars first? That we must know first, right? So pillars are what? Capitals here. There are 3 pillars in Basel always. Capital, minimum capital, okay? Minimum capital. Here, over here only it's written. Minimum capital is pillar number 1. Pillar number 2 is supervisory. 2. This is SREP. And this is pillar number 3, market discipline. Okay? So I have taken in details these lectures. Okay, also join these live classes. I take usually over there. Okay, so these are the 3 pillars. And what is this then? Risk oriented supervision. Nobody knows. Okay, Tantan Gopal. Okay, so this is the right answer. Not, we want not. So this C is the right answer. Got it, everyone? C is the right answer. Everyone is typing C. Correct. Next one. What are the elements of tier 1 capital including additional tier 1 capital as per Basel III? Now tier 1 including additional T1. See here, tier 1 will have 2 parts. Just now we saw it, CET1 and AT1, right? So they want everything. So what is the answer then? Paid up equity capital, statutory and disclosed reserves. Point number 1. Capital reserves representing surplus arising of sale of proceed of assets. Here, surplus means whatever I have sold on that asset and whatever I have gained on that. Means if I had bought that asset for 100 rupees and I have sold it for 130. So that 30 rupees which I have got extra is represented under this T1. So is it so? That is my question. You need not. I am asking you. You shouldn't ask me. Now B is this. And C is what? PNCPs, perpetual non-cumulative preference shares and debt instruments eligible for inclusion under 81. So, what are these eligible for under 81 which are long term, no compulsory payment? So, or all of the above. So, which one is the answer? A, B, C or D? Fast. See here, B is correct. Okay, PNCP is there. So, B and C are there. Type fast. What is the answer? Now, I give you the hint. A, B, C or D? Yes. Paid up capital is a part of tier 1? Yes, it is. Correct. That's why all of you are typing correctly. The answer is all of the above. All these form a part of T1. Okay. Remember this by heart. Okay. Next. To calculate the capital adequacy ratio, the banks are required to take into account which of the following risks? Now, which are the 3 risks? Just now I told you. Which risk? Credit ops, credit market and operational, credit market operational. Fast. I want the answer fast from every one of you. Fast. Be fast. Okay. We don't have time to waste. Right. Correct. Everyone is typing the same. D. Correct. D. Yes. Everyone should type. I would feel. Write in the comment section what's happening to you. Type in the comment section. Okay. You are live over here. So yes, Let me also check how many of you do understand it actually. Okay. Next, what is the full form of NSFR? See this. NSFR comes under which capital? First tell me, which Basel norm does NSFR come under? NSFR comes under Basel 2 or 3. Fast, fast, fast. Basel 2 or 3. Everyone. Yes, it comes under correct. Basel 3. There are two ratios in Basel 3, LCR and NSFR. LCR. Okay, and this NSFR is the second one. Okay, study my lecture again. Okay, LCR is liquidity coverage ratio, NSFR is net stable funding ratio. Okay, I gave you the answer, isn't it? Okay, so again, net stable fund ratio, net sustainable funding ratio, net stable funding ratio, net stable fundable ratio. See here, NSFR norms that mandate banks to maintain a stable funding profile in relation to composition of the assets and off-balance sheet activities will be operational from April 2020. It's already operational over here. Okay, now, so NSFR is for 1 year. Always remember, it's for 1 year. And LCR is for 30 days. It's for run on the banks. Okay, 30 days. Run on the banks. Okay, so this is highly liquid and this is for stable 1 year. So type the answer A, B, C or D. Fast. Yes. Yeah. Correct. See, net stable funding ratio. Okay. As per Basel III implementation in India, minimum tier 1 requirement must be Basel III. T1 requirement or as per Basel III of the risk-weighted assets on an ongoing basis. So, minimum T1 capital must be how much? As per Basel III. What should be my minimum capital requirement as per Basel III? Minimum T1 requirement, tier 1. Type fast. Okay. I'll give you one hint over here. A, B, C, D. Okay. Let me write one answer over here. E. Okay. And let me write it 6%. Now let me check how many of you are correct or thinking or how many of you have followed. As per Basel III, I want it for Basel III. Okay. So minimum requirement for Basel III is what? Basel III is 6%. Okay. E and 7 is RBI. RBI says 7%, right? So RBI has stated it 7%, but in exam, if the question comes for Basel III, the answer is 6%. RBI is 1% higher, right? For T1. Got it, everyone? Next, last one. As per Basel III, the risk of loss in the on balance sheet and off balance sheet positions arising from the movements in the market prices is called. Means there are three types of risk: credit, market, and ops, right? See this, credit, market, and ops is there. It's not given over here. Credit, market, and ops. So due to market movements, see here, this is basically market prices means what? Movements in the markets. Okay. So is that in your hand? No. So that's basically the answer. Market risk. Remember, market risk is never in your hands. Never. Credit risk is in your hands. You can control it. Ops risk you can control it. Market risk you can't control it. Okay. So how to use this code Y432? I'll show you over here. See here, I'll show you live. It's very easy. Okay. See this. Go to Adda 24/7. If you are having the app, it's the best. But if you don't have the app, I would always suggest you to download the app here. Because what happens? That's the easiest way. So now I'll show you on the website. Go on the website. Okay. See this. On the website, you'll see on the front page. You'll see this JAIIB CAIIB exam. See this. Click over here. JAIIB CAIIB. You'll see this now. JAIIB CAIIB over here. See this. Click on CAIIB. On CAIIB, you'll see this again. The batches. See these batches. Okay. Click on this selection batch. Dark blue batch. Okay. Selection. Okay. See this selection batch. On this selection batch, you'll see the details. Okay. Details. Just now I told you 35 plus hours of ABM, BFM, etc. Okay. Now let's come to the fees topic. 13299 is the fees. Click on view offers. In the offers, you'll see this. Enter the code. What is the code? Y432. Once you apply the code, see the fees. Fees reduces. Okay. Y432. Okay. Yeah. Okay. There's some problem over here. But if you apply the code, the fees gets reduced by 77%. Okay. So click over there and there you'll get the offer. Then you'll get the offer. Means it's usually almost at least 75-77% of offer. Okay, so once you get that, where are we? Immediately we get all the discounts over there. Okay, so go for it, and it's an investment for lifetime. Okay, so don't wait, move as fast as possible. I'll see you tomorrow with another topic. So bye from my side.